Hello, everybody. This is Brian Terry with the Conservative Covered Calls Trading Group, and I wanted to share with you a trade that I made last week. I called it the trade of the week. It's pretty much a typical in the money covered call, but I just wanted to walk it through with you. So this trade we did was in BX, and we bought the shares at 140.67 per share. I did that on 12/2 on Thursday. And at the same time, I sold the 12/10 expiring 130 calls and collected $11.66 credit. So based on this setup, the trade had a maximum return of 0.77% in 8 days, which really works out to a 31% annualized rate of return. The good thing about this trade is that because we sold the 130 call, we actually had a 1.29% of downside protection, meaning that that stock could drop from 140.67 all the way down to 130, and we would still have a profitable trade. And the break even is 129.01, which is just simply the price of the stock less the credit we received. So I just want to walk through what happened. So here's a chart of BX for the week. And you'll see here, we did this trade on the 2nd, which was really a bullish, looked to be a bullish reversal on Tuesday. And on Wednesday, the stock pulled back and it ended up about 133. It went back up the next day, and then on the last 3 days of the week, it kind of pulled back and hovered about the 133 level. And what was interesting, that it had gotten as low as right around 130, but then pulled up and stayed above that 130 level. So the outcome of the trade was the stock did go as low as 130.24 and closed at 133.80. So we bought it at 140 and it finished at 133. So because we sold the in the money covered calls, we netted a 0.77% return, and our shares were called away this morning. What's interesting is the stock was down 4.88%. Since after I put the trade on. So if we had just bought the shares and sold an out of the money or even an at the money call, we would have lost $6.87 per share, or $6.87, less the credit we would have received for selling that call. And so the trade netted a 0.77% in 8 days, which was about a 31% annualized rate of return. It netted $99 for every 100 shares that we bought, and our capital is freed up so we can reuse that capital again next week. So again, the stock ended the week at 133.80, which was down just about 5%. So if we had used more of an in the money or a more aggressive covered call strategy, it would have not been a winner like it was. So I hope you guys found this helpful. I do send out a email every Monday and highlight a few of the trades that we are looking at for the week. So if you have any questions or any feedback for me, I'd really appreciate it. And again, you can reach us at the Conservative Covered Calls group or the conservativecoveredcalls.com. Thank you very much.